Hi there, welcome to Kneppy Invest. In today's video, I'm going to give a bit of an update to a company called Cogstate, focusing on their Appendix 4C for the September quarter. Now, I'm a little bit surprised as this company is still required to issue quarterly reports because they are profitable and in most quarters they are cash flow positive as well. And the other thing, I have been following this company for over 10 years, and what they've achieved in the last 10 years, how they've grown, is quite impressive. So let's get stuck into the video. And the first thing I want to do is just talk about what Cogstate actually do. Cogstate is a neuroscience company that provide computerized cognitive tests, typically in clinical trials, and they also support electronic clinical outcome assessment solutions. They also offer quality assurance services for clinical trial endpoints that combine operational approaches, advanced analytics, and scientific consulting. Now, the company does have three segments. By far, the biggest segment is cognitive testing in clinical trials. In this market, their technology and services are used to quantify the effect of diseases and of drugs, devices, or other stuff on human subjects participating in clinical trials primarily conducted by pharmaceutical and biotechnology companies. The second segment is the healthcare market. In this particular segment, the technology and associated services are being developed as a tool for primary care physicians and or hospitals to assess cognitive decline. A third segment is the provision of technology and associated services to academic researchers. But by far, the biggest segment is clinical trials. That is how I know this company. And in terms of how big clinical trials is, or segment clinical trials is compared to the healthcare and academic research, we can actually go to their financial report, and they do break down how their revenue is, or where their revenue is derived. And this is that breakdown of the derivation in their revenue through their different, or via the different segments. And by far, clinical trials is their biggest segment, and it's not even close because Cogstate generated $45 million of revenue in financial year 22, and over $40 million of that was in their clinical trial segment, $4.5 million in their healthcare segment, and only $195,000 in their research. If we look at the gross margins, healthcare has the better gross margin. So $3.2 million of gross profit in healthcare, only $23.7 million in clinical trials, and in their research, they're actually not gross profitable. So when you do look at Cogstate, I would probably focus on their clinical trials. Now, in saying that, all three segments are growing. And if healthcare can get a bit of a kick on in their growth because it does have the highest gross margins, that would actually be beneficial for the company in the long term. Now, to some facts in regards to Cogstate, founded in 1999. So this company has been around for a while and has been on the ASX for about, or just over 18 years. So listed in February 2004. The current CEO is Bradley O'Connor. He has a 2.5% stake in the company. And two of the largest shareholders are on the board. So David Dolby, 15% stake, and Martin Meyer, 13.6% stake. Both are on the board. And if I remember correctly, they do have pretty significant positions like chairman and something like that. And one of the other large shareholders in this company is Australian Ethical Investments. They have 11.7% stake in Cogstate. Now, the current market cap of this company at the close of trading on November 11 at a share price of $1.91 is $330 million. So it's not a really small cap company. It's not either a very large cap company. It's a nice cap company at this point in time, particularly because Cogstate is profitable, they're growing their revenue and profits, and they're also cash flow positive. And the ticker code for this company is CGS. Now, before we have a look at the September quarter Appendix 4C, let's have a look at the financial year 22 numbers for Cogstate. And these are pretty good results, in my opinion. Now, all numbers have been converted to Australian dollars because they actually report in US dollars. And the most likely reason for that is because most of their revenue is derived in the United States or North America. Nice growth in revenue, increasing from 42.8 million to 64 million. That's exactly what we want to see. Gross margins are increasing They went from, or rose from 54% to 59%. So two things I really look for are increases in margins, particularly gross margins and operating margins. So if we see increases in those, that's actually a good sign for a company. And one of the reasons why it's a good sign, particularly increases in gross margins, it tells us that that company might have some pricing power. Operating cash flow fell from $21 million to $13.8 million. Now, that does not concern me. But if we see operating cash flow falling over a number of years, that would be concerning. Now, the reason why operating cash flow might have dropped for Cogstate, and I actually didn't have a look at this, is because there could have been a change in working capital. For instance, movements in trade receivables, trade payables, or even inventory. And so if you do see a 1 year drop or a significant rise in operating cash flow or even free cash flow, that shouldn't be a concern, particularly when you look at profit. And profit for Cogstate increased from 6.8 million to 10.7 million. So if we compare that profit to the market, we can see the PE ratio is around 30 or just under 30. And yes, the PE ratio for this company is just under 30. The price to operating cash flow is also not that too stretched at 22.8. And the thing I left out here is this company is or has net cash, $44 million of net cash. So if you calculate your valuation metrics based off the enterprise value, and I do this a lot. So instead of calculating the price to earnings ratio, you might calculate the EV to earnings ratio, and you'd get a lower number. If you calculate the EV to operating cash flow, you would get a lower number because the enterprise value of this company is actually less than $300 million. Because you should take into account the cash and the debt a company has when you value that company. That is the right way to value any company. Now let's have a look at the Appendix 4Cs for Cogstate. But before we have a look at the first quarter for financial year 23, let's just go back 1 year ago just to see how this company has performed over the past year. Now, receipts to customers 1 year ago, 9.7 million. And the company was actually operating cash flow negative in this particular quarter by about $266,000. So not too extreme. Now, the cash on hand actually increased from the previous quarter to this quarter, but they did have $24 million of cash at the end of this quarter. So let's have a look at the most recent quarter, the first quarter of financial year 23, just to see how this company has progressed from last year to this year. Now onto the September quarter results, just to see how this company has performed over the past year. Receipts to customers up to $11 million. So receipts up about $2 million from last year. And the company was operating cash flow positive by over $1 million in this particular quarter. And the other thing to take into account is this company didn't really increase much of the spending during the past year. Staff costs actually down $200,000, administration costs up $50,000. There's also some other costs in section 1.8 here. Other professional fees actually did increase. Information technology costs also increased. But the main thing here is the company is operating cash flow positive and slightly free cash flow positive as well. And at the end of this particular quarter, they had $30.8 million of cash. Now, you might be saying, at the end of the financial year, they had $44 million of cash. Now they've only got $31 million of cash. So why is there a discrepancy? Well, this is US dollars. When I showed you the financial year results, that was Australian dollars. So you have to convert $30.8 million to Australian dollars. And if you do that, you get around about 45 million Australian dollars. Now onto the receipts history for Cogstate. And I started following this company back in the June quarter of 2013 when they had $8.1 million of receipts. And they didn't have a better quarter than that quarter for another 3 years. So it took them 3 years to have a better quarter. But generally, when you look at the receipts for Cogstate, they are going up. Not in a straight line. There is a bit of lumpiness here. But the main thing here is receipts are increasing through time. You can see there have been a couple of quarters, the December quarter 2017, the December quarter 2021, where receipts just ballooned up in one quarter, $15.3 million in 2016 and $22.3 million in 2021. So on occasion, this company has a really good quarter, and there's probably some reason behind it. The main thing is the receipts have gone above $10 million on a quarterly basis. So 5 of the last 6 quarters have been above $10 million. So it seems like, based off the trend, this company should be remaining operating cash flow free cash flow positive moving forward. Now let's have a look at the charts for Cogstate, and the first chart here is the weekly one going back to 2012, just before I started following the company. And when I started following this company, share price was in a weekly uptrend, and then the sentiment turned around in this company, and the share price actually fell from about 50 cents in the middle of 2013 down to about 12.5 cents by the end of 2014 in the start of 2015. So there was a period of time that the valuation of this company was really low, and maybe I should have taken advantage of those times, because I've always liked this company, but I've never taken a position. And then the share price broke out towards the end of 2015. The share price went from about 20 cents to a high of about $1.37. And then he saw another period where the share price dipped back. And in fact, the share price dipped all the way back to 12.5 cents. The share price fell from $1.38 to 12.5 cents over about a 3-year period. So just because Cogstate have been successful in what they're doing doesn't mean the share price goes up in a straight line. There's going to be some volatility when it comes to companies like this, because the market is a little bit wary, and the market's not sure if the company will make it in the long run. And then towards the middle of 2020, that's when I think the market realized this company was going places, and that's why the share price has really taken off over the past few years. But over the past year or so, the share price has been quite volatile. So let's have a look at the daily chart just to see that volatility. And if we take a look at the daily chart here, going back to November last year, there has been a fair bit of volatility during certain periods. In fact, if you take the high during this period, which was about $2.68, and that was in December last year, and the low was $1.25, which was in September of this year. And then during this time period, we've also seen some really rapid rises and drops in the share price. And more than likely, those rapid rises and drops in share price have been because of company-specific news. We saw that in January this year, share price suddenly dropped over about 4 trading days from about $2.40 all the way down to $1.55. And then in late September of this year, on high volume, we saw the share price suddenly shoot up from $1.45 to about $2.40. And because that was on really high volume, that is telling me that was something Cogstate Pacific. So something they released to the market, and the market really liked that news release. And then we have seen a little bit of pullback in the share price over the past few months. And the share price right now around about $1.90. And just based off the valuation with the P ratio just less than 30, I think there might be some value in this company, because I definitely can see a future where the profit, operating cash flow, free cash flow, and revenues continue to climb at a fairly impressive rate over the next few years for this company. That's all I have for this video, looking at Cogstate's September quarter Appendix 4C for financial year 23. I'm not exactly sure how many more Appendix 4Cs this company will have to release. It seems pretty obvious that they shouldn't have to release these anymore if they don't want to. But sometimes, and there are cases on the ASX where companies still want to release their quarterly report even though they don't have to. So I'm not sure who ends up making that decision, if it's up to the company or if it's up to the ASX to tell the company they don't have to do or release these reports anymore. In saying that, wouldn't be surprised to see Cogstate issue an announcement saying they don't have to release Appendix 4Cs anymore, because they are profitable, they are cash flow positive on a continual basis. So look out for that sort of news flow from this company. And if we don't get that news flow and they continue to release Appendix 4Cs, I would enjoy that, because there's only 2 companies I know that don't have to release Appendix 4Cs that are still doing it. That's Fiducian, and that's also Clinuvel. So maybe Cogstate will be another one of those companies. Maybe it already is one of those companies. Anyway, if you have any questions about Cogstate or any company on the ASX, just leave those questions, your thoughts, in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.